Okay, so within a market maker model, you have the left side of the curve, the right side of the curve, and then you have discount arrays, premium arrays, then you have points of interest. Um, so in order to find the best points of interest, you want to use arrays from the opposite side of the curve. So, for example, we can look at yesterday's price action, and we were here looking at the larger sell model. So we have the split in the curve here, okay? That's the high, left side of the curve, right side of the curve, if this is going to be a larger sell model, okay? If we're going to roll over like that. So what you do to find your point of interest is use an array from the left side of the curve here on the right side of the curve to formulate a trade. So, for example, this breaker, bullish order blocks, you can call it whatever you want, becomes the point of interest for shorts. Okay, we displace down below it, and then we run back up higher towards it. It needs to act as resistance. This needs to act as resistance, or else the model fails. And so the point of interest becomes this entire block. You can sharpen it down to that, whatever you want, but that becomes your entire point of interest for taking a short to continue the sell model. And what happens, it gets invalidated. Okay, maybe you can take advantage of the shorts, yesterday morning, 9 a.m., dropped lower, like those, there were some good shorts in there, but we tapped into this daily fair value gap and we rolled higher. So at this point, we closed above the bullish order blocks, the breaker, the invalidation level, the POI for sells, and then that becomes the POI for longs. You just invert it. You just switch it. The invalidation level is the POI. It's always that. So we invalidated shorts. This needs to act as support. Put discount array because we're above it. It's a discount array now. And then you can take longs from that up to the original consolidation. So price comes back down into it and then runs higher. Doesn't take out the high yet, so that's what we're waiting on today. There's another run higher to take out the original consolidation of this larger buy model that started on Monday this week. So once we close above, this now becomes the POI here. Okay, if you're uncomfortable with that, all you have to do is go towards the left side of the curve. So now we have the midline here, like we have the SMR, Tuesday at 10 a.m. Everything to the left of that is the left side of the curve. Everything to the right is the right side of the curve. So first PD array is this fair value gap. So we invert it here at 3. You can look for longs at 4. You know what I mean? Once we invert that, that becomes your POI. And then what happens is, obviously it's end of the day, but price comes back into it, tests it, and then we can go long. But there was a market maker model down in here you could have taken long as well. And so that's really how you determine your POI. So for today, let's just look at today's current price action. The POI for me would be this. So we have the fair value gap. Okay, we've inverted it, we've closed above it. It needs to function as support. Okay, price comes back down, functions as support. What I would include in this is the fair value gap plus breaker. So I would probably include this entire range here as my POI for longs. And that would also be the invalidation level. So if we close below this, it would invalidate this entire buy program. And it would probably just leave us at the highs with SMT, and we would look for shorts. But for now, we've closed above this array, this fair value gap, this bearish order block, which functioned as support, resistance, dropped lower, so it goes higher and needs to function as support. You could use that alone. You could use this whole entire thing. Doesn't really matter, because what you want to see function as support is this low. So these lows through here, that's basically what you don't want to see get closed below. Or else the buy model fails. So you can make it easy and just use the order block if you'd like. So yeah, hopefully that answers your questions. Basically, it's the same philosophy, it's the same theory on the 1 minute chart as it is on the hourly chart and the daily chart. Your POIs are your invalidation levels, and then you treat it the same way as you would, a 1 minute chart reversal. You look for the left side of the chart to function as support on the right side of the chart. Just the same as anything, you know what I mean? Like we have this breaker here, we get above it, support, doesn't close below, runs higher, and then you just work your way up the chart. You look for the next area of support or resistance and drag it across and look for it to function as support or resistance on the other side. So it's all relatively the same. I wouldn't overcomplicate it too much, honestly. Like if you focus on just finding the market maker models, finding the curves, finding the left side of the curve, the right side of the curve, and then just trading it, then you'll be okay. Same as here. This is a market maker model. Left side, SMR, right side. Okay. So the SMR here, okay, we close above it. Like this becomes your POI. Once you get above that and you come back down to test it, this is your POI down here where you're looking for longs. Once we get into that, this is on the left side of the curve. We're looking for longs in there. That's the POI. And don't get so caught up of like, if I got it right or wrong, because you can use this. You can use these fair value gaps here. Okay, it's all relatively the same. Like if you want to use those rather than that breaker, okay, fine. Price comes down into it and tests it. No big deal. If you just want to use this one, it's no big deal. Price comes back down and tests it. You just have to find a level and stick with it. And it has to make sense within the market maker model. It has to be on the opposite side of the curve. Okay. Left side, right side. So hopefully that helps. I'll post this up in the Discord.